we're walking with the Lord in true fellowship. You can't censor this, we're talking about discipleship, uncompromising truth. Drop it like John the Baptist. If you don't tell them, they might never discover it. So hello everyone, welcome to Futures Talk 2, talking to Crypto Stu about elephant money futures today. Give me a hand in welcoming Crypto Stu, everyone. Woo-hoo!
Thank you. I love the energy.
Thank you. So what I'm going to do is I'm going to pin your thing. Oh no, I remember, because are you going to share your screen today?
Okay, yeah, that would be great.
So he's Scottish.
Busted.
Okay, I totally thought that you were USA. So
nope. Here in Scotland, up in Perth.
Oh, come on. All right. Okay, so we're in the same time zone.
Yeah.
And I've been telling you EST this whole time. I'm so sorry. Okay.
That's all right. I'm used to it.
Me too. All right. So, okay, let's pin your... There we go. And you should now be able to share your screen and take us through it. So just over to you.
Okay. Well, let's just share this. You can give me a little thumbs up if you can see my screen okay?
Yes, we can see it. Perfect.
Yeah. Perfect. Okay. Well, hi, everybody. As Nikisha says, I'm Crypto Stu, and I'm really delighted to be joining you today to share a little bit about elephant money futures. Just to be totally clear, I'm not part of the elephant money team. I would describe myself as an enthusiastic investor. I've been invested in elephant money since March of 2022. And I've been following the progress of the project really since then. But I've got so excited, that's the only word I can really use for it, over the course of this last few weeks since futures has been released, because I really do see it as being an absolutely amazing opportunity for anyone to get involved with. And I wanted to, Nikisha asked me to come on and have a chat with you all today, just to explain a little bit more about what elephant money futures is, how you can get involved, why it might be something worthwhile researching a little bit further. I also created the elephant money futures calculator, so I thought it might be cool if any of the attendees here want to run a few ideas for strategies, we could maybe have a play around with that and see what that actually looks like. So that was kind of my plan for today. I'm just an average investor, like I'm sure most of you here on the call, looking to secure my financial future by diversifying where I invest. And decentralized finance, really, I was introduced to DeFi in about March last year as well by a friend, ATX, and Elephant Money was actually the first project that I got involved with. And since then, it's been a bit of a roller coaster ride, I think is probably one way to describe it, because of everything that's been happening within the market since then. So I put together a bit of a presentation here just to kind of talk through the main points with regards to elephant money futures, but I really would encourage you to raise your hand, bring yourselves off of mute, whatever. If you've got a question, please don't be afraid to ask it, and I'll do my best to answer as we go. So elephant money futures, the new high yield cash flow engine where you can earn 0.5% per day on your BUSD stablecoins. So what on the agenda as part of this short presentation that I've put together, I want to go through an overview of what futures is. I also want to be upfront about the risks that are involved, not just the risks with elephant money, but the risks of DeFi as a whole. Because I think it's really important that everyone enters this space with their eyes wide open, because otherwise we just end up making silly decisions because we start to get emotional about our money, which is only natural. So I think if we approach this with the right intentions from the word go, we set ourselves up for a successful and a much more enjoyable journey within DeFi. I want to talk about why futures is different, what sets it apart from the other opportunities that you may have heard of or that may be out there, whether that's in traditional finance or whether it's in DeFi. I want to then explain how it works, because it's really important to have an understanding of exactly, if you're putting money into a project, you kind of want to know how it works and why is it a good investment. I've talked about the risks, but there is also a huge opportunity here. And so I think it's important to highlight just the potential that we have in front of us, particularly right now. I'm actually really jealous of anyone who's really just looking into this project at the moment, because you are joining at exactly the right time where this is just picking up momentum. And, the future looks really, really bright for Elephant Money. We'll then have a look at some kind of bog standard strategies that I have come up with in the past that may give you some ideas as to how you might, if you choose to invest in futures, how you might want to play it. And then I've left some time for questions at the end, but as I said already, if you have any questions as we're going through this, please feel free just to interrupt me. I'm not easily offended. So, quick overview of what Elephant Money Futures is. Now, you had the AMA, I think it was about a week ago, where you had Bank Teller on, you had SK Crypto K, and you had Bailey from EMH, and they gave you a really good overview of Elephant Money, the system or the ecosystem as a whole. And today, I really want to focus in on Elephant Money Futures. And so Elephant Money Futures gives you the opportunity to deposit BUSD stablecoin and earn BUSD stablecoin, and you're going to earn at 0.5% per day. That in itself is massive, and it sets it apart from some of the competition, where you are potentially earning a native token to the project, and that native token is there's always going to be the risk of that token being volatile and potentially going down significantly in price. Whereas when we're looking at BUSD, the stablecoin, it makes it very easy to calculate kind of what your returns are expected to be. There's a minimum deposit of 200 BUSD, and that counts for your initial deposit, but also for any subsequent deposits. And if you do a subsequent deposit, that fresh deposit that you make will automatically compound any rewards that you have built up. And that's ultimately how you can increase your earning potential within Elephant Money Futures. You can claim the rewards at any time, and the rewards happen in real time. So you don't have to wait for a day in order to see your rewards building up. Your rewards will increase, every single second, or every single block on the blockchain. You're going to see your rewards creeping up. And you can claim those rewards at any time. It is important to note, if you do claim the rewards, it will be deducted from your balance. And I'll show you what that means when we go into some of the examples. These next two bullet points are really, really important, and it's really key to understanding why this model is sustainable. 90% of the funds that you deposit, so 90% of the BUSD that you deposit goes into what we call the BUSD Treasury. That BUSD Treasury is then used to buy Elephant token and to feed the Elephant Treasury, also known as Bertha, which you heard about in great detail from Bailey the other day. And that's really key. 10% of the funds go to the BUSD buffer pool, and that buffer pool's job, its only job, is to pay the yield, or pay the interest, if you want to call it, on the futures. So, I fully expect that the buffer pool will actually be responsible for a large part of all the futures payouts, at least for the next 300 to 400 days, just with the way that the system is built. All the yield is backed by the Elephant Treasury, so if the BUSD buffer pool can't pay the rewards, then it'll be the elephant, Bertha, the Treasury, will sell elephant tokens in order to cover the liabilities of the futures yield. There's, for you as a user, there are no fees, there's no taxes. Again, that's a major selling point in comparison to some of the competition out there. You put 200 BUSD in, your account is showing as 200 BUSD. You're not having to pay taxes and fees, etc. There are referral rewards. So if you use someone's Stampede Herd partner link, then when you claim, they will receive 1% of the claimed amount, and that will be paid to them in trunk and airdropped into their Stampede. The contracts are fully audited, it's secure, it's a trustless system, so you are in control, you have self-custody. The protocol does not have access to your funds in any way, shape, or form. There are some rate limiters that have been put into place, and this is to really kind of taper the effect of hyper compounding. Once you get to a point where you have compounded a huge amount more than you have deposited, those rate limiters will begin to kick in, and that is it slows the payouts that the Elephant Treasury has to be responsible for, and it's a much more sustainable long-term view. And it's not something that you need to be thinking about initially, but it is included in any of the calculations that I have given, and it's included in the calculator that I made. There are also some caps and thresholds. 1 million is the max balance that you can have. 2.5 million is the max payout that you can pull from any single futures account, and you can accumulate a maximum of 50,000 in rewards, or the same value as your futures balance, whichever is less. Now, those caps and those thresholds, if you're anything like me, those numbers seem a long way off. But you can be assured that there will be people in the community where these numbers are significant. And in actual fact, what they're there to do is they're there to protect all of us. They're there to make sure that no one single person can build an account that is so big that can do damage to the protocol. And it means that the Elephant Treasury will always be able to pay that yield. So that's a quick overview of the system. I said I wanted to talk about risks. I think it is really important for people to be aware of what the risks are within the space and within any individual project. And I mentioned in that previous slide, self-custody. So, Salali, you have your hand raised. Would you like to ask a question?
I do, if I may. Is it okay to interrupt you while you're presenting, or shall we ask questions at the end?
No, I'm quite happy to take questions along the way.
Perfect. If you could go back one slide, I want to clarify those limits, right? Yep. Would you mind running through that one more time? Because I'm seeing 50K max accumulated rewards. Does that mean once your interest accumulates up to 50K, you stop getting 0.5% per day? How does that work? If you don't mind going through that line again.
So what would happen is, well, let's just use the example. If you had $1 million in your balance, okay, at 0.5% a day, you would be earning $5,000 per day. And so after 10 days, you would have accumulated $50,000 in rewards. At that point, you will not accumulate any more. And in order for you to start accumulating more rewards, you either have to claim, so you could claim that 50,000, and then the next day you would earn 0.5% on 999,995 or whatever it is minus the 5,000. Or you could compound. You couldn't compound if you were at the million because that's the max balance. But hopefully that answers your question. The other thing to be aware of is, say you're working with a smaller account, and say you've got $1,000 in your account, and you do nothing for 200 days. Okay, after 200 days, if you're earning 0.5% per day, you will then have accumulated $1,000 in rewards. At that point, because the accumulated rewards are equal to your balance, you wouldn't accumulate any more. So at that point, you have a choice. You can either claim the $1,000 and walk away having made no money, or you can deposit another $200 so that your balance would now be $2,200, and then you start the process again.
Okay, that clarifies. Thanks. I have another question, if I may.
Yeah.
How do you only have $1,000 if you started off with $1,000? Shouldn't you have $2,000?
No. So because you're earning 0.5% per day, after 200 days, you will have 100%. So your rewards will equal what your balance is, and that it's your rewards that you can claim. So if you were a very simple strategy, and I'll talk about this later, but a very simple strategy, a very hands-off approach would be, do nothing for 200 days, and then on day 200 deposit another $200, and then do nothing again for another 200 days, and then so in 400 days in total you would double your money.
Understood. Thank you.
Okay, so just carrying on with where I was, the risks. So a couple of main risks that I wanted to highlight. Self-custody, which is something that I mentioned as a positive thing in the previous slide, is a positive thing because you're in total control of your money, but you're also in total control of your security. Your wallet is your own responsibility. Your seed phrase is something that you really need to keep safe. Your private keys you need to keep safe. And you need to be sure that you're interacting with trusted protocols and trusted developers. And there are so many scammers in this space that you need to be on your A game all the time to make sure that you're not falling into the traps that these scammers are putting out there. And I just wanted to raise the importance of wallet security. And if possible, use a hardware wallet, a ledger. And I think it's great that you all have this nice community that you're in, because you can help keep each other safe. You can help share best practice. One of the things that I found most daunting when I first started in DeFi was, how do I keep myself safe? How do I make sure that I am not the target of a scammer? Or how do I make sure that I'm not clicking links that could end up emptying my crypto wallet? And so, help support each other, share best practice. If at all possible, try and use a hardware wallet, which is going to keep your seed phrases to yourself, and do not put them on any electronic device. Have them written down on a piece of paper, kept somewhere safe, maybe in multiple different places. And do know that the scammers will be out there, and they're very clever. So keep an eye on each other. The other thing to mention is just general DeFi and crypto risks. So, investing in your bank account is one thing. These bank accounts are insured. The government can step in if there's an issue. DeFi is different. It's unregulated, and so we have to accept we're in this space because the potential returns are far, far greater than they would be investing in traditional finance. The risks are also higher as a result of that. It's an unregulated space. That again has pros and cons. But if a scammer does get hold of your account, you've got no recourse. You can't call up your credit card company and make a claim to be reimbursed for any money that has been stolen. So it can be a risky space. You can protect yourself by doing what you're doing, joining a community where you can support each other, and really doing some research on the projects that you do decide that you want to invest in. Projects that have got a strong background, have got a good team that are working for them. But we're in uncharted waters here in DeFi, and it's not the establishment, Wall Street, whatever you want to call it, are not going to be particularly happy if all of us are able to achieve financial freedom through DeFi. And so it's going to be constantly in the spotlight. And there's going to be a lot of false news that gets spread around the risks and what's going to be happening in the future of DeFi. So, you need to find good sources to get your information from. And the last thing is the actual risks of elephant money itself. And I think the two biggest risks in my mind are the possibility of an exploit. You know, the protocol is buttoned up really, really tight. The developer bank teller who you saw in the last call is really on the ball, but we never know. You know, we can never be 100% certain that something malicious might not happen in the future. And so that's something to bear in mind. And business continuity. So at the moment, bank teller is the one man in charge. Now, the vast majority of Elephant Money, which is different to lots of projects out there, the vast majority of Elephant Money is largely all automated. It's all written in code on the blockchain. However, there are still little elements of the project that where BT has to intervene manually, such as, you know, tweaking the APR rates in the government strategies. Now, bank teller has said, I think he might have mentioned it in the AMA with you guys a week ago, that one of his main focuses now is that business continuity and putting plans in place so that this is less of a risk than it might be in its current state. And so with all that being said, you know, I think the sensible approach is it's very easy to say don't invest more than you can afford to lose. And that's probably quite difficult for us to actually get our heads around, because no one likes losing any money. But, you know, you should be investing amounts of money that are not going to put you in financial difficulty if the worst was to happen. And that's the case for any investment, but it's particularly so here in decentralized finance. So we've got the risks out of the way. What makes futures different? Why do I think, you know, as an investor myself, why do I think that this is, you know, why am I putting my money here? 95% of my investments are now in Elephant Money. Why do I get that confidence to do that? Three things at the top. So number one is the developer, bank teller. He's an MIT graduate. He has a background in fintech and finance. He has developed systems that literally have trillions of dollars going through them each and every single day in the Forex market. And so, you know, if I'm investing, if I'm putting my hard-earned money into a project, I want the developer, the man in charge, to have the relevant background. And there's so many projects that are out there in DeFi where that just isn't the case, because literally anyone can set up a project. Anyone can set up a project and really kind of fleece you. So bank teller, he has been around. Pretty much everything that you have seen in DeFi has stemmed from something that bank teller has created in the past. And that, for me, gives me huge confidence. The second thing is the community, the Elephant Money community. So on Telegram, there's, you know, 10,000 people in the community, and we've had a rocky year with the exploit in April. We have had a rocky year, and the community has stayed strong. And every single step of the way, they have supported BT, they supported the project. And I think that of all the communities that I've been involved in, the Elephant Money community is probably the and, you know, I think Ged is here on the call. A large part of the success of the community, I think, has to be given to him. He has kept everyone motivated when times have been tough. And so, you know, from me to him at the moment, just to say thank you for doing that, because the community is such a large part of our investments here. And I find comfort in the fact that we've got such a strong community. The Elephant Money attracts smart investors. There's no way to kind of skirt that fact. There's people who have huge amounts of money. That doesn't necessarily make them smart, but there's people who are willing to commit a huge amount of money to Elephant Money itself. And there's also a really strong community of individuals who are out there to support it, to provide tools and resources, whether that's in terms of making videos or writing articles or creating tools and calculators and all of these things. And Futures itself, this final product that we're talking about today, was an idea that BT had, and that idea was then discussed with the community, and the community then shared feedback on, you know, what they saw, what were the pros, what were the cons of this, and between the knowledge that everyone holds within the community, we see this final product, which, you know, is why we're here and what we're talking about today. The other thing that makes it different is this isn't just another ROI DApp. Now, I don't know how familiar you all are with DeFi, but ROI DApps were kind of the hot craze in 2022. And, you know, it's fair to say that most of them are really, really struggling at the moment because they have been beaten down with a bear market, and the combination of people being able to hyper compound their balances with a native token just results in one thing, and that's the spiral, the downward spiral of the price of the token. And so regardless of how big your balance is, your daily rewards aren't worth very much because the price of the token has dropped so dramatically. And so, you know, that's one of the key benefits of that BUSD in and BUSD out. But beyond that, and probably more important than that, is just the sheer size already of Elephant Money. It's the 9th largest holder of BNB on the Binance Smart Chain. It's got liquidity that cannot be forked. Okay, so you could have a protocol come out and see futures and think, yeah, I like the idea of that, let's make a copy of that. But no other protocol has the resources that Elephant Money has. And those resources are only going to grow, as a hope that you gathered from the presentation from Bailey last week, in terms of how Bertha appreciates in both size and value over time. And if we've got questions on that, I don't know it as deeply as Bailey does, but I'm happy to talk about that in a bit more detail as well. Time is another really important factor with Elephant Money futures. So as I've explained, 200 days, okay, so if you earn 0.5% per day, in 200 days, you've earned 100%. And so the protocol has a huge amount of time for Bertha, the Elephant Treasury, to grow before we're going to see significant withdrawals from the system. And that time is a huge factor, and a huge positive that I see anyway from Elephant Money futures. The fresh deposit. So if you want to compound in Elephant Money futures, you have to make a fresh deposit. You have to put in that $200. And that ensures there's a consistent flow of new money coming in. Gone are the days where, you know, we thought we could put $100 in and then in a year take out $1 million. It's just not realistic. It's not going to happen. And so with Elephant Money futures, we're forced, if we want to actually profit from this system, we have to keep investing our money. And that is how it should be. You know, think of it like, I think BT, you know, uses a similarity of running a little business. You know, if you want to grow your business, you need to reinvest some of your capital in order to make that business grow and scale. And it's exactly the same with Elephant Money futures. And it's a small price to pay for the awesome returns that you can achieve within Elephant Money futures. So how do you use Elephant Money futures? As I've said, the minimum deposit is $200. Your rewards will then start immediately. So as soon as you press that deposit button, you're going to start seeing the rewards coming in, and those rewards will accumulate every single day until we reach those thresholds that we talked about earlier on. And if you claim your rewards, they're deducted from your balance. So for example, if you deposit $1,000 and you build those rewards up for 30 days, so you're earning $5 a day, that's going to be $150 after 30 days. If you were to claim those rewards out, your balance would go down to $850, and then you would start earning 0.5% on that $850. And so you'll very quickly realize that in order to actually make money, in order to profit from Elephant Money futures, you have to, at the very least, make one further deposit of $200. That's what's going to take you into that profitable territory. However, it was built to be used very much like how we use a savings account. It's like that regular, how much money can you afford to invest on a monthly basis or a weekly basis or a daily basis, and you put that money into Elephant Money Futures, and over time you allow that to grow, you accumulate the yield, you recompound it back in with these fresh deposits, and you get to a point, set yourself a target, whatever that target might be, and then once you've received that, you can choose to either take a big payday, or you can choose to start paying yourself a passive income. And so to give you an example of the kind of compounding, let's say you start with $1,000. After 30 days, you've got 150 in rewards. If you deposit another 200, your balance then goes up to 1,350. That's the $1,000 you had originally, plus the 150 in rewards, plus the 200 deposit. And so now you're earning 0.5% on 1,350. And so after the next 30 days, you'll have $202, $202.5. If you deposit another $200, your balance is now 1,752, etc., etc. And you keep doing that until you achieve a balance of your, of whatever you're looking for. And then you can start to either claim out or however you want to approach it. And we can have a look at that as we go into the strategies next. So we talked about the risks. The opportunity is, as I said at the beginning of my session here, I'm quite jealous at the timing. You're joining this, or you're potentially joining this protocol at possibly the best time. There's been some real milestones have happened just today. So the Elephant token itself has just managed to break the all-time high between the exploit and now. And that was September. So we're now at a higher price than we were back in September, and that's the first time we've seen that since then. And the Elephant Treasury has just hit 110 trillion, which is absolutely huge. That's since futures has launched, the Elephant Treasury has grown by about 11 trillion, I think, which is, that's over 10%. That's massive. And it's only been going, a week and a half, there or thereabouts. So we can already see that this is beginning to work. And that gets me really excited. Futures is highly flexible, and it provides huge opportunities for you as an investor. And you can look at it through various different ways. It could accelerate your retirement. It could replace your income, or maybe you just want it to subsidize your income. It can provide that passive income stream that you can have going alongside whatever work you already do. For me, it's about financial security. It's about knowing that I can comfortably pay my bills and I can look after my family. That's why I'm investing in Elephant Money Futures. And the product itself is so flexible. You can really create a strategy that matches your goals. What do you want to achieve from the system? What is your risk profile? Are you quite conservative, or are you happy to be a bit more aggressive? And that's something that we can have a look at when we start to have a look at the strategies. Maybe you just want to build up a huge balance and have this massive payday at one time. Maybe you want to achieve passive income where you can start to think about scaling back the amount of work that you're doing. Maybe things change 2 years from now and you need to pivot, you need to adapt, and futures gives you that flexibility to be able to do that. You're not committed to running the same strategy as what you do when you start. You can change your mind as you progress through it. And so a couple of really straightforward examples that I thought that might go down quite well with this community. Number one is the monthly saver. So, I accelerate your retirement essentially is kind of how I've themed this one. If you deposit $200 today, and then you continue to deposit $200 every month, after 2 years, your balance would be 42.5K. After 3 years, your balance would be 207,000. So we're starting to see the power of compounding. Essentially, if you're depositing monthly, weekly, you're looking at around about 5x, 5 timesing your balance every year. And so in year 4, you're talking, you're at that $1 million balance mark, the max account. And that doesn't take long. And that's just a $200 deposit and $200 every single month. Okay. When I first got into Elephant Money, I have to admit that I was slightly off put by the huge amounts of money that people were talking about. I was seeing deposits coming in for $5,000, for $10,000, for $50,000. And at that point, I just wasn't I didn't have the capital, and B, I wasn't willing to commit that capital to the decentralized finance. And I found, that a little bit off-putting that there were all those big, whales within the space. And I can assure you that Elephant Money Futures is a level playing field. That's what's so beautiful about Elephant Money as an ecosystem as a whole, because Bertha is the biggest whale, and Bertha can't dump on us. The largest elephant token holder only holds, less than 1% of the supply. I think it's about 0.8% of the overall supply is held by one person. That's quite different to what you would expect to see in other projects, where these big whales have a huge amount of control as to what happens with the price of the token. And so Elephant Money is a level playing for us all. So this can be a good move for us, whether we're coming in with $200 or whether we're coming in with $100,000. It makes no difference. We've got the Treasury that's backing it. A second strategy, which might be, someone that is looking to replace their income, doesn't necessarily mean you need to quit your job or anything like that, but having double your income coming in every month, I don't think any of us would complain at that. So to do that, in simple terms, if you can deposit 10% of your monthly salary, sounds, quite a lot, and it, possibly is. Maybe it's too much, but work with this for the numbers. If you can deposit 10% of your monthly salary, and you can keep doing that monthly until your balance is 20% higher than whatever your salary is at the moment, and that's going to take roughly 21, 22 months, you can then switch to a schedule where you claim 1 week and you deposit another week, and you'll be earning roughly the same amount of money as you're being paid in your salary at the moment. So, less than 2 years, if you can put 10% away every month, in less than 2 years, you can equal your salary. So I was going to have a look now at the calculator, but I'm conscious I've done quite a lot of talking. Are there any questions so far?
Sorry, me again.
No problem.
On your second strategy on income replacement, are you talking 20% greater than your current salary in months or in years, or does it not matter?
So let's say you currently earn 50,000 a year. Okay, you'd be looking to achieve a futures balance of 60,000. That's just 20% more than the 50,000.
Got it. Thanks.
And just the way that it works out with the 0.5% a day, it needs to be about 20% higher than your current salary in order for you to be able to claim that amount every month, at the same time as still growing the futures account in a slow fashion.
And of course, you have to keep up the deposits in order to increase your balance for the compounding effect to work and to claim the rewards.
You would do. But remember, at that point, you're then claiming, every second week. And so you could use a portion of the amount that you're claiming to then pay for the deposits.
Yeah, absolutely. Great.
Any other questions? Okay. While we're doing that, can you see the calculator now, folks? You could maybe just give me a quick thumbs up. Yeah, okay, thank you, Elizabeth. So this is the Elephant Money Futures Calculator that I put together. Some of you may have already had a chance to have a look at this, but I thought this was a really good opportunity that you can to see the power of the numbers. I see a question there from May coming in the chat. Is there a limit to how many accounts that you can have? No. You know, because crypto is anonymous, you know, it can't be kept track of how many wallets someone has, and so there's no way to implement that. So you can have as many accounts as you would like, but bearing in mind that every single futures account you have, you need to pay that $200 deposit anytime that you want to compound, and that adds up. So that discourages, you know, people setting up multiple wallets. So the strategy, or sorry, the Elephant Money Calculator here. If you aren't familiar with this, it's really straightforward to use. It looks quite complicated. I've tried to make it as user-friendly as possible. There is an instructions tab. I also have created a video. Now it's not actually linked on this sheet here because this is my copy, but on the main public copy that I have made, there is a YouTube video where I go into detail, so you can always refer back to that at a later date. But essentially, I'll quickly run through maybe a couple of the strategies that we've already discussed there. So if you were to deposit $200, that's your first deposit, then thereafter, you're going to be depositing $200 on, if you're wanting to deposit, if you want to compound, I should say. So then the frequency of that is where you would click this drop down list. Now you could do that monthly, you could do it a weekly deposit, you could do a bi-weekly deposit, and bi-weekly in this sense is every 2 weeks, it's not twice a week, just to clarify that. So let's just stick to that monthly deposit. And in here, we are going to try and build, we're going to deposit every single month until our futures balance equals $100,000. Okay, that's, you know, that's a huge growth. So it's going to take a little bit of time. And then once we've hit that $100,000, we're going to switch to a schedule where we alternate weekly. So 1 week we claim our rewards, and the next week we deposit a fresh $200 in order to compound our rewards. And as you can see over here, this is the blue line on the chart. We can see it takes us up to, what are we here, about month 31 by the looks of things. So 31 months for us to grow this initial deposit of $200 plus our monthly deposits of $200 into $100,000. And thereafter, we can then essentially passively live off of alternating weekly. If we scroll down, we can see the numbers in a bit more detail here. So over the life of over 3 years, we will have deposited a total of $8,600, you know, every single month, depositing that $200. And we hit 100,000 on, you know, it's in between month 31 and month 32. And at that point, you know, our rewards, we're making, you know, nearly $500 a day. At that point, we will probably have just gone into the first rate limiter, so we won't be earning quite 0.5% per day. At that point, we would maybe be earning 0.45% per day. This is the limiters that I was talking about earlier on to stop hyper compounding. So that's one strategy. The second strategy here is the income replacement strategy that I was talking about, and I was using an example of a $50,000 per year salary, which is roughly $416 per month. So if you do your initial deposit as the 416, and then ideally if you can do, you know, $208 twice a month, you're going to benefit from the, you know, a bit more compounding by doing the twice per month compounding than you would do with just one deposit per month of 416. And then we build that up to 20% higher than our current salary, so that's $60,000, and then alternate weekly. We can see that it takes, you know, 21 months to hit that $60,000, and then at that point we'll be earning, let's just jump into the strategy and have a quick look. we scroll down here, so twice per month we'll be claiming about $2,200. So that's 4,400 per month, there or thereabouts. So it's actually slightly above our 4,160 monthly salary. So, excuse me, grab a drink of water. So there's so many different ways that you could potentially play this. One of the most passive ways would be the double in 400 days. So, you know, perhaps you want to put a bit more money in at the front. Let's say, I don't know, $5,000, and you're going to double in 400 is the strategy that you want to have a look at. And you will see here, a second, taking a while, that, you know, month 12, we basically get that $10,000 back from a $5,000 investment, and we only have to make 3 transactions: the initial deposit, the deposit at day 200, and then the claim at day 400. So a really easy passive way to double your money. Now, I'm not suggesting that that's the best strategy. I actually think that, you know, a strategy where you're growing, the way I'm using this is more as a savings account, and I'm just putting a little bit of money away every single month in the hope that in 2 years, 3 years time, you know, I've got a significant amount in there that's going to, you know, secure me financially moving forward. So what might those strategies look like? Well, you could do, let's say you did $1,000 as an initial deposit, and then committed to doing $200. You could do a strategy, something like do nothing for 2 weeks. Then after 2 weeks, you will you'll deposit, and then after 1 further week, you claim. And so you're constantly pulling a little bit of money out of the system along the way. So this is a bit more of a conservative approach. And you can see that you're going to start, this is the red line, you're starting to claim money out of the system from the word go, you know, from 3 weeks in. And so, you know, it's probably it's more conservative than just, you know, aggressively building your balance every month, but you're still benefiting from that compounding with the 2 weeks where you're doing nothing. So I would encourage you to have a play around with the calculator yourself. There has actually been another calculator that has been created by a member of the community. This is what I'm showing you on the screen now. This is a web-based application. It's maybe slightly more straightforward. So if you aren't great with spreadsheets, or you find my calculator confusing, then you could maybe start by having a look at this other futures calculator. It isn't as flexible. It doesn't allow you the same options, and it doesn't have the graphs and things, but it is a really good start if, you know, big spreadsheets make you nervous. And, you know, I think, you know, we're coming towards the end of what I wanted to share with everyone, and I hope that I've given the futures product justice. I really do think that this is such a fantastic opportunity. If we just quickly have a look at the Elephant Treasury, because remember that the Elephant Treasury is what is paying, it's the backstop for paying the yield. And the Elephant Treasury, you can see here that this purple area on the chart, and you can see the significant impact that futures has already had on the growth of the Treasury. This is, we can see on the right hand side of the chart there, the big difference, and it's, you know, it's supercharging the growth of the Elephant Treasury at the moment. It's a really exciting time to get involved. And we've got the elephant chart here. We can see this was the latest, or the high of September, which we have broken through just today, which is fantastic news. The momentum is really building. You can even see it in the Telegram chat. You can just see that people are starting to become excited about this. And, you know, the synergy that I think that exists between the futures product and the elephant token is just, you know, it's masterful financial engineering, because, you know, we deposit in futures, which feeds the Treasury. The Treasury is then responsible for paying the yield in futures, but the growth of the Treasury will outpace the debt of futures. You know, for example, I think in this last couple of weeks, the Treasury has grown about 5 million in value in comparison to the just over 1 million that has been deposited in futures. So if you're asking yourself about, you know, is this sustainable? Does this sound too good to be true? I would say that that's the answer. That's what you were looking at. The elephant Treasury and the elephant token itself is this beautifully designed system that is going to, mathematically, it's going to appreciate in value over time. Now, that's not to say that there aren't going to be periods of ups and downs. There will be, but what will happen is the floor, you know, will keep rising over time. And there's huge potential with the elephant token. So, you know, not financial advice. None of what I've mentioned today is financial advice. I'm just a regular guy off the street. But, you know, if you're looking into the elephant money ecosystem, grab a little bit of elephant token, you know, because that's your share in the company, in the community bank. You know, if you want to be yeah, off the Scottish streets, if you want to be a part owner of this community bank, then pick up some elephant token and then help that elephant token by and your own future through investing in elephant money futures. And I think that is pretty much everything that I wanted to cover. So happy to answer questions if we've got any.
Don't be shy, ladies. Have you got any questions for Crypto Stew?
Lisbeth.
Yes, hi, beautiful presentation. I really appreciate your time greatly.
No
My question was, when you say like big payout, does that mean not claiming rewards, but just letting it compound and not taking anything out at all?
Yeah, so if I just jump back into this calculator here, so essentially, if we look at this first strategy here, I'm going to change this ever so slightly. Let's imagine we invest 5,000 to begin with, and we, whatever amount you really want to, and we build that up by depositing weekly, monthly, you know, every couple of weeks, and we get to our deposit of 100,000. What we could, or our balance of 100,000, I should say, what we could do at that point is do nothing for 200 days and withdraw $100,000. That's what I mean by a big payday. Or the alternative to that is to follow a strategy where you're taking out little bits at a time, and then you're maybe reinvesting some of that so that you continue to grow the account.
Got it. Thank you so much.
No problem.
May I ask another question, unless someone else has one?
Yeah, please do.
Yeah. Crypto Stew, I'm asking again about limiters. You had a 2.5 million limit on payouts. Can you expand on that?
Yeah, so let's say your balance, you've managed to accumulate your rewards, and ultimately you end up with a balance of $1 million. Okay, from that point on, or really from any point, the total amount of money that you can claim from any single wallet is $2.5 million. So does that make sense? Do you need me to explain it further?
It does. It just means if you keep adding 200,000 and compounding, you can't claim up to a point. Or does it actually restrict you from adding more money into the balance?
So the $1 million cap, that would restrict you from going above that. So you couldn't go above the $1 million. So let's say you had $1 million and you claimed out 50,000. At that point, you could then make a deposit and start building it back up towards the 1 million. And so you could keep doing that essentially until you've claimed out a total of $2.5 million.
I see. Okay. At which point it must then stop you from making further deposits in, right?
Yeah, that would be that account would be finished in that respect, and you would need to start again from scratch.
Got it. But then again, the workaround obviously is to just create multiple accounts.
Yeah, you can, along the way, as you're building your bag, you could start creating more accounts along the way, for sure.
Thank you.
No problem.
Does anybody else have any questions?
Did you call my name? Sorry.
Oh, sorry, I think you were maybe just sending a thumbs up rather than a question.
Oh yeah, I was just saying thumbs up because I had the same question as the lolly, but I had forgotten. So you answered that.
No problem. Nikisha, how about you? Do you have any questions or anything you want to add?
No, because actually Liz, Salali, they asked questions that I was thinking, and I was like, oh, this is good. So I got my answers that I was looking for, basically. But yeah, what part of Scotland are you from?
I'm from Perth.
Oh yeah, you did say that. You did say that.
Yeah,
okay.
about an hour north of Edinburgh.
Okay, yeah, I've been to Edinburgh, and I was an hour outside of it, but I don't think it was Perth. Yeah, so
it's not that memorable. You probably wouldn't remember it if you had been here.
I've traveled all over the UK, playing music. What is that?
Akakia, as you have your hand raised.
Yes, I was just curious. What does the withdrawal process look like? Like when you claim the money and all of that?
So it's really straightforward. Let me just see if I can load this up. So I was trying a new wallet out, and I thought this might be a good opportunity to give it a try. Okay, so this is the futures dashboard on the Elephant Money website. In order to deposit, you would just click the Your Future button here. You would then need to approve the BUSD in the contract, and then you would then go in and deposit your rewards. So this wallet that I've got, unfortunately, doesn't have any money in this futures account, so I can't show you what a withdrawal would look like. But this button down here, you would press that, and then there'd be an option to claim. Then you approve that transaction, and then the money goes straight into your wallet for you to do as you please.
Okay, thank you.
I think just while I've got the website up here as well, something that's really important to take away from here is I mentioned earlier on that 10% of the funds go to the buffer pool, the BUSD buffer pool. So we can see here that there's 110,000 in the buffer pool at the moment, and the daily liabilities are only just 5,500, and that's what people could potentially claim from the system. That isn't what is being claimed. The reality is that number will be a lot less. And so time was one of the things that I mentioned was a differentiator between this project and some of its competitors, because ultimately that BUSD buffer pool is going to be able to manage the liabilities of the futures contract for a long time. It's going to be at least, I reckon, certainly beyond the 200 days before we really have to start looking at the yield being covered by the elephant money treasury. And even then, a large proportion of the yield will still be paid through the BUSD buffer pool. So it's another tick for sustainability in my mind anyway.
I think another key takeaway here is to understand how the way this protocol works differs from traditional finance. So I think people need to realize that you do need to babysit this. If you just put in an initial deposit and do nothing, when you look to withdraw, all you can withdraw is your initial savings amount. So you do need to put in the 200 periodically to see the appreciation, to be able to gain access to your rewards. I think that's quite key.
Yeah, I think you're
from what you'll see with traditional payout schedules on savings accounts. The other thing I did want to ask, if there are no more questions forthcoming at some point, you did mention that there are different ways that Bertha grows. I know you're not the expert on this, SK Crypto probably is, but if you have a couple of minutes, it might be worth just walking through that for us.
More information. No, absolutely. I'll explain it to the best of my ability. But essentially, Bertha will grow through. So every time someone buys or sells the elephant token, there is a 10% tax, and that tax goes to Bertha. So she's, regardless of whether people are buying, whether they're selling, whether they're transferring, Bertha is always just eating up all of those taxes, and that, for a start, that helps her grow. On top of that, we now have futures. Okay, so when someone deposits into futures, 90% of that deposit is then going to be used to buy the elephant token, and that is going to fund Bertha further. We also have the graveyard, which I'm not sure how much detail was spoken about the graveyard, but the graveyard holds at any time at least 50% of the overall token supply, the elephant token supply. And so it's allowed to increase up to 51% of the overall token supply. And as soon as it hits 51%, it sells off elephant token and redistributes those tokens to all the elephant holders, and the largest of which is Bertha. And so she benefits from that redistribution of the graveyard. And so the protocol own liquidity, which is currently sitting at about 60%. So if we have a look at, this is the elephant token, and this is the holders, and we can see these first four accounts here, the 50%, 11%, 11%, 7%. These are all, well, they're all protocol, they're not all protocol owned. The Pancake Swap pools, I don't know if we could describe those as protocol owned, but at least 60% of the elephant tokens that exist are owned by the protocol. And what's going to happen is because Bertha, gradually just grows bigger and bigger and bigger, she is going to then, all of a sudden she's going to be the second biggest token holder, and she will continue to grow. And that means that the rest of us have to fight and squabble about, a reducing amount of tokens. That's for the supply shock because of scarcity. So if you think about, this like in a pie chart, the graveyard plus the Bertha, the elephant treasury, will gradually will start to eat up more of that pie, and that's where the real beauty of this system comes into play. And then on top of that, and this is not insignificant, is that because of that supply shock, supply squeeze, and the appreciating price of the asset, naturally people want to hold on to their elephant tokens longer, and people start noticing the elephant token, and then you end up with a chart that looks like this, which is what we experienced back in March last year. And this is what we're fully expecting to happen. It may not be quite as severe and as vertical as we saw the last time, because we've got deeper liquidity now. We've got two deeper liquidity pools, the BNB pool and the BUSD pool. And so it may not be quite as extreme, but this is what we're beginning to see happen if we you can see it's happening. You can see it on the chart. Look at this area of price action here and compare it to this area of price action here. This is the time to get in. I really do believe that. Does that help, Salali?
Absolutely. I just wanted to add that so the curve may not be as steep going up, but the reason why I guess it capped up at the top there was that the exploit.
Yes, there was a couple of things happened, which was, it was unfortunate at the time, obviously. This first big red candle, what happened, and I remember it, there was a scam that went around the Elephant Money Telegram, and there was like fake airdrops that happened. And, all of a sudden that was a coordinated attack, and they managed to compromise a big amount of wallets, and then they sold off the tokens. And so that was that initial red candle. And you can see that, the system did what it's supposed to do, and it bought that back up. And it was starting to increase again when, unfortunately, we had that malicious exploit. But the exploit was, don't get me wrong, it hurt. It hurt my own investment considerably. It did give me an opportunity to buy it in again at a cheaper price, because I think I bought in somewhere around here, so it was already quite high. So it allowed me to get in at a cheaper price, and it allows all of you to get in at a cheaper price. But more importantly than that is it highlighted certain areas of weakness in the protocol that BT has spent a huge amount of time now making sure that all those gaps, all those holes have been filled within the system, and that it's now a much more secure protocol than it was in March of 2022.
Excellent. So barring any further exploits, which of course no one can predict, that curve may go up on a gentler slope, but then we can expect that it shouldn't come down dramatically again. So essentially, whenever you're holding an elephant, that value would stick, because Bertha, if people decide to take profits, right, the curve will come down, but then Bertha will keep going to push it back up.
Yeah, so the job of the Treasury is to gradually increase the floor price. That's what it's going to do over the long term. So it still allows people to speculate. It still allows people to buy low and sell high, and people can still make a profit doing that. But the kind of the overall trend and direction is it's designed to go in an upward fashion. That doesn't mean to say you're not going to see down days and days where, maybe even multiple days where the price goes down, and where it's also, it's linked to the price of BNB. And so, we're benefiting as well at the moment from an increase in BNB price. If BNB starts to go down, then we might see the elephant token going down. But what will ultimately happen over the course of time is that we'll start to see the elephant token price action remove itself or decouple itself from BNB price action.
That's with more people buying in, with more demand.
Yep.
At the moment, we're also, I guess, linked to BTC, just because everything in crypto is linked to BTC.
Yeah, well, BNB is linked to BTC.
Yeah.
Everything is linked to BTC, really, in some way, shape, or form. But because of the design of the elephant token, we can begin to decouple ourselves from what's happening in the rest of, the economy. Essentially, we don't know what's going to happen in the economy coming forward, and there's lots of uncertainty. However, and that's why I'm willing to kind of place my bets, I suppose, if you like, with elephant money, because I can see that it can weather that storm probably better than any other financial instrument. And we've seen that in 2022, even despite the exploit. If I zoom out here, if you ignore this huge run up and run down, you can see that we're just in a nice steady rising trend. What other price chart can you look at the moment that can say the same? The system works. It's fantastic. Okay, well, I guess if we don't have any further questions, I'm happy to take any more if they come. But I think that is me finished for. I think I've said everything that I wanted to say. I hope that you have all found this useful. Feel free to reach out. I'm sure Nikisha can share my Telegram details. If anyone has any questions and you want to get in touch with me directly, more than happy to have a chat with you in DMs or however you want to do that. And please play around with the calculator, because it really will open your eyes as to how this system works.
That was great, Crypto Stu. I have your calculator. I've been playing around with it. It's great. Are you willing to share your presentation as well?
Yeah, absolutely.
Perfect.
I will send that to Nikisha and she can forward it to the rest of you guys. I'll probably just share it with the rest of the Elephant Money community as well.
Excellent. Thank you so much.
Okay, thank you.
Thank you so much, Stu. That was incredible. Yeah, just thank you so much for your time and for your brain.
No problem at all.
Yeah.
I enjoyed it.
Oh, good. We can get you back.
Yeah.
Awesome.
Anytime. As long as I'm not working, I'm happy to jump on.
Okay, awesome. Okay, ladies. No further questions. Then we just bless Crypto Stu on his brain. And we just thank him again. Thank you so much, everybody. Yeah, if nobody's got any other questions, then we'll just end it there.